Nasdaq Adtalem shares are down almost 9% today, despite beating Q4 expectations on the top and bottom line and seeing a 10% jump in enrollment. They did note a bit of margin pressure as they make investments across the business. Let's bring in Adtalem Global Education CEO Steve Beard. Steve, dive in here. I mean, and this one's getting more of a shout out lately from analysts and Charlie Babrinskoy, who on this, I think he's your fourth biggest shareholder now, quite bullish on the business. What are the dynamics here?
Well, setting aside today's trading activity, our business really enjoys some really strong fundamentals. As you noted, we've got growing enrollments. We enjoy some really strong secular demand trends in the area. The demand for nurses, physicians, and veterinarians is only growing. And as the largest provider of those professionals, we're well positioned to take advantage of that demand. So short-term market gyrations notwithstanding, we believe we're really, really well positioned to meet growing and durable demand.
Yeah, people who have heard our past interviews know that you guys are active in kind of the nurse education space, things like that. I mean, Babrinskoy's point was in part that if Trump wins, that could be a positive catalyst for for-profit education stocks. Not like you're trying to get swept up in election odds, but do you think part of the headwind could be that Harris's odds look better these days?
Well, look, we believe that when there's a Republican administration in the White House and at the Department of Education, there's a belief that the regulatory overhang on the business is somewhat lighter. But we've built a business that we think can thrive in any political environment. We've done well during Biden's first term. And if there's a Democrat in the White House after November, we believe we will thrive in that environment as well. Again, we are providing a social good. Nurses, physicians, and veterinarians are sorely in need across the United States. And we're providing opportunities for students to pursue those careers who might not otherwise have them.
A lot of people are paying more attention to what's going on in the labor force. The slowdowns we've seen, the rise in the unemployment rate, could in part be because there's so much new immigration supply. Is that affecting enrollment at all?
Not for us. So typically a slowdown in the economy is viewed as being helpful to higher education because folks tend to retool and go back to school. But because of our healthcare focus, we're actually immune to that cycle. We've got secular demands that run across economic cycles, and that demand is only growing. So not really an issue for our institution, but a slowdown in the economy is typically good for education broadly defined.
Yeah, if that's what's happening. Real quickly, what's with the margin pressures? Maybe that's what has investors concerned.
Well, look, we've had flat margins year over year as we committed to the street. That's largely a function of some of the investments we've made in the long-term health and growth of our business. But when we came out with our announcement yesterday, we committed to at least 100 basis point improvement in margins over the next fiscal year. And we think that's something we can sustain as a floor going forward. So we've got a very attractive profitability profile, and we've got the ability to expand those margins. So we're excited about that.